Welcome back. The Nifty is now at 25,150. Mid-caps are doing well. In fact, even better, nearly 400 points in the mid-cap index. Bluestone Jewelers, it had a very strong run over the last couple of days. Volumes were on the higher side. It opened in the red, but now is back in the green. You can see strength in Hindustan Zinc, Vedanta, so lots of metals on the buyers list. Add Nalco to that. Nalco is up nearly about 3.5%. Swiggy is seeing some buying. Inox Wind. In the pharmaceutical names, Aurobindo Pharma catches your attention, 4.5% up, good volumes as well. So the screen is alive when you look at the mid-cap index, and large caps too, moving along quite nicely. Amisha Vora from PL Capital is now joining in to talk about markets. Amisha, lots of quarterly updates have come through from the banking side, consumer, real estate. I mean, what's your expectations going into the Q2 earnings season? Should one, be fully invested? If yes, in what? As we anticipate the numbers to trickle in?
I think, Q2 is at such a beautiful juncture where the numbers for Q2 maybe not as good because we are factoring GST confusion rather than GST positive impact. We are capturing monsoon rather than post-monsoon good impact. But at the same time, I feel that the Q2 numbers will provide a good base and the commentary will be the one which markets will watch out for as to how the ensuing quarters are looking post the GST cut. So I think Q2 numbers should be seen from that reference.
Yes, management commentary, because a lot of changes happened in Q2 itself. Amisha, in that case, you're talking about management commentary. Of course, a lot of market moves would depend on that. But what are some other risks that markets would be factoring in, or what are some of the triggers that markets are watching out for apart from earnings?
I would say that from risk perspective, a lot has really happened both globally, on geopolitical, on tariff, and particularly on tariff beyond everybody's imagination. Domestically also, if you ask me, a little bit of monsoon here and there really disturbs. So a lot has happened in terms of risk. From here on, because I always believe that tariff cannot be permanent, but GST cut is permanent. And that will trigger a demand recovery. And that is what I think will be looked at. The best part would be that while that is happening, that GST-led consumption demand, just before that, both markets and credit growth has been very steady or stagnant. If you see, our credit growth has been, I think, lowest in last 12 months, in last 10 years. So that means there is no bubble, there is no inflationary impact getting captured. And from that base, when we start, the recovery will be really lasting, is what I feel.
I like the line, Amisha, that tariffs are temporary, but GST cuts are permanent. And that perhaps should dictate the way one looks at constructing their portfolio. In fact, we chatted with Siddharth, I think exactly a month back, and he was saying that at PL Capital, that you all have turned a little more aggressive or bullish on the equity markets. You all had a defensive strategy. Now it's moderately aggressive, and you all have been deploying a lot of cash. So tell us, incremental cash in the last 1 month, where have you allocated it to?
So we took very large positions in metals.
Okay.
And we believe that across the segment, whether it is steel large cap, mid cap, and beyond that, copper, zinc, wherever one gets, and aluminum, a combination of exposure in metals will be very beneficial. And up till now, it has been holding really well, that call. But we think that this call is going to last much longer. The second position that we think could be really good way to capture the recovery will be banks and NBFC, specifically as we see the credit growth consumption picking up, so will the credit growth also. And that's where particularly NBFCs, which are in consumer-driven NBFCs, could do really well. And the third spot, coming down to consumption itself, there will be many places where the consumption impact will be felt in terms of companies. Some of the companies which we like really a lot were 18 to 5% GST, places like Britannia. We think that last 3 years' growth and next 3 years' growth will be starkly different. So there are pockets where we think that there could be a lot of action.
Are you seeing more comfort come by in large caps versus mid caps and small caps, Amisha?
No, because market had been so stagnant for a while. And if you see even banking, NBFCs, 6 to 8 months have been pretty stagnant position. So that's why the first focus we think is large cap. But yes, there are select pockets of mid caps that we really like. We continue to like our defense position, even though it has moved up, stocks like hell. We like our energy and transmission position, Voltam. So there are hospital space we've been very bullish on, and we continue to maintain that stance. We selectively change sometimes the names, but the space we continue to like. So yes, mid caps also are continuing.
Amisha, tell us a little bit more about this aggressive bet on metals, because it's not just a tactical allocation. You're saying it's a little structural. So what are the top 2-3 reasons why you like metals?
A, we will have to take a little domestic view. That domestically, now the protection is there for 3 years. B, the domestic growth is really good in metal consumption. But see the more, and that, it's a very economies of scale immediately falls. Whatever is a price growth comes down to EBITDA, comes down to PAT. So the impact is typically very stark. But the third most important reason we feel is that globally also, in last 5 to 8 years, if you see the capacity expansion has been extremely scanty and low. So post-war, as the building construction starts, America also wants to rebuild their manufacturing in whichever way they succeed, but they want to rebuild things. I'm sure Russia, Ukraine, I'm sure Israel, Gaza. So everywhere reconstruction, plus in China in particular, also we feel that the capacity expansion had been very limited. So we feel that there could be a sustained phase where consumption will grow. And because the supply has not been so strong in last 5 years, the prices also will.
All right, Amisha, always a pleasure speaking with you. Thank you so much for joining us today with your thoughts. The sectors you're bullish on and overall market call as well. With that, we'll do one thing. We'll slip into a short break. When we come back, we'll get you more on the markets on the other side. And we'll also talk about the big story of the day, that is the pharma sector. Stay tuned for that.